Hey, everybody, welcome to episode 1769. And you know what that means. On Friday, we will have a 10th episode show, and it is also Flashback Friday at the same time. That is a rare occurrence, so it should be a good one. We got a good surprise for you on Friday. But today, we have a whole variety of things to talk about. Of course, for our American listeners and viewers around and others around the world, I want to wish you a very happy Thanksgiving. If you don't celebrate Thanksgiving, of course, meaning you're not American, I encourage you to just keep an eye on this holiday. It's a good one. You know, it's that one time of year when we're really reminded to be thankful, to be grateful about what we have in these times of absolute turmoil in the world. There's a lot to complain about, no question, and rightfully so. These complaints are legitimate, very legitimate. But there's also a lot to be grateful for, because when you ask the question of yourself, compared to what, right? Really think about the compared to what. Compared to different times in history, compared to different places in the world, no matter how bad we have it, right? No matter how challenging things might seem, I'm sure nobody listening or nobody viewing this woke up in a North Korean prison camp, right? Now, sadly, some places around the world are starting to look more and more like prison camps. And I'm thinking of our dear friends in Australia with all the absolute totalitarian nonsense that's going on there. But regardless, compared to what, we're still pretty lucky, right? Okay, let's dive into some things we have to talk about. There's a lot on the agenda today. So happy Thanksgiving, of course. And real inflation, real rates of return. Well, let's take a look at this. We've talked about this over the years. We talk about nominal interest rates versus real interest rates. We talk about negative interest rates. But you can also look at this as it relates to return on investment. And of course, we all know that old story about the two hikers in the woods, and a bear starts running toward them, and one tightens his shoelaces, and his buddy says to him, "Man, what are you doing? You can't outrun a bear, no matter how meaning no matter how tight your shoelaces are, right?" And he says, "I don't have to outrun the bear. I just have to outrun you." And of course, that's the same. The same is true with inflation, because when we are chasing yield, when we are chasing returns, we have to, of course, beat the hidden tax, the liar, the thief, the pickpocket. That is inflation. That's what it is. It is pickpocketing us. It's destroying the value of our savings, our stocks, and our bonds, and our equity and real estate. It is literally stealing the value away from these things. And this chart is from Dan Ammerman. He's been on the show many times. And as we look at high inflation and real rates, 1981 versus 2021. So we look back to 1981, when inflation was very, very high. That was the Jimmy Carter hangover. Of course, if you are interested in economics, you must study the decade of the 1970s. It's a fascinating decade for the study of economics. Why? Because we had the misery index, we had a lot of tumult, we had price controls, we had Nixon taking us off the gold standard at the beginning of the decade, we had Nixon's historic trip to China, which I believe, and this is just my own thought, I've never read or heard this anywhere, I don't know of anybody that's ever really talked about this, but I believe Nixon was, Nixon was a very, very bright man. He was very intelligent, regardless of his foibles and his weird way of talking and his potential criminality with covering up Watergate, right? Doesn't mean he's not smart or wasn't smart. And he was a very, very intelligent person. And so I believe after temporarily, which was, of course, a big lie, suspending the convertibility of the dollar into gold in 1971, he saw a great wave of inflation coming. And he really saved us from what could have been and probably would have been much, much worse inflation. I mean, we think it was bad in the 70s and into the early 80s until Paul Volcker, the Fed chair that would never probably happen again in today's world, broke the back of inflation by raising interest rates to historically high levels, which may be what needs to be done in the near future. But I say it's extremely unlikely this time around because we do not live in a world anymore where the public would tolerate taking the tough medicine to fix the problem completely, right? It's always nowadays that the mantra is kick the can down the road. Uh, every elected official, especially presidential administrations, they don't want things to go bad during their administration, and they don't want to be blamed for it, right? Oh, look at that awful economy under whatever administration you have at the time. So let's just take a look at this, right? The real rates of return. So here we've got in blue the 3-month Treasury yield. We've got real inflation adjusted yield in green, and of course the inflation subtraction. Now, understand that this is based on the quote unquote official rates of inflation. The real rates were, of course, much, much higher, but they weren't as manipulated back then as they are today. In fact, I have done some shows on this. I did one profile of Tom Keene on the economy. You may have heard him on Bloomberg. And this was years ago on the Creating Wealth podcast. We played some clips about this, how the Fed in cahoots, I want to say, or conspiracy with the Bureau of Labor Statistics, the BLS, how they manipulated the way inflation was counted. And big manipulations happened in the late 70s or right around 1980. So here we see the 3-month Treasury yield at 14.03% in 1981. We see inflation eating away at that yield of 10.38%. Very high inflation, of course. The real rate probably quite a bit higher than that. So we see the real inflation adjusted yield on the 3-month Treasury, if that was your investment of choice back then, being 3.65%. Okay. What about today? How does it look today, right? How does it look if we take the rolling 3-month averages? And Dan Ammerman is a real student of this. He does a great job with his data. And he's been on the show many times. So please go back and listen to the interviews with Dan Ammerman. Really, really good stuff there. Okay. He does some really good work on inflation. Okay. So the the 3-month Treasury yield, you can't even see. It's this tiny little 0.04%, right? It's virtually non-existent, right? You can't even see the blue bar on this chart because it is so so small. Okay, inflation subtraction 7.6%, and of course this is a rolling average, right? So here we look at the real yield inflation adjusted, negative 7.56%. So here today, we are getting inferior yields, but people probably don't see that because they think, well, inflation isn't as bad as it was in 1981. So, we're still running faster than the bear, right? The bear that's chasing us in the woods and that's about to maul us to death, right? But that is simply not true. And of course, the inflation statistics today are manipulated much, much worse than they were back then. So in other words, real inflation versus reported inflation, there is this giant gap, this huge delta between the truth and the reality. And most of us know this to be true because most of us did not vote for the current administration. And why do I say that? How do I know that? Well, Jason, half the country voted for him. Yeah, but not the people listening, because the people listening are financially savvy, right? They get it. They understand that this administration is a disaster. Not saying the last one was perfect. None of them are. They're all Keynesians, meaning that they're all into just increase the supply of money, consequences be damned. We'll worry about that later. Kick the can down the road. They're all that way. Trump was that way. Bush was that way. Obama was definitely that way. Just it's the way it is. It's very unfortunate that that's the world we live in, but nobody wants to take the medicine anymore. Okay, so Ashley will be on toward the end of the show today, talking about Zimbabwe and what that can teach us as investors about diversification. Remember, those who do not learn from history are doomed to repeat it. And just think about history for a moment, and think about what how people in modern liberal democracies think about how this kind of totalitarian oppression that we saw in during World War II in Germany, for example, under the Nazis, right? This could never happen to modern democratic countries. Well, it's happening, right? It is happening right now as we speak in Australia. If you are not aware, or you're only slightly aware of what is going on to affecting 25 million people down under in a modern democratic country, it is absolutely shocking. Just go do some research on it before all of and by the way, just assume, like these faulty, lying, fraudulent inflation statistics and unemployment statistics and GDP statistics, everything's a scam nowadays, right? Just assume that the information you're getting about what is happening down under is largely suppressed and largely manipulated, and that the truth is much worse than what's being reported. Because, of course, where are you going to get the information? From Google? From YouTube, which is owned by Google? You're going to see it on Facebook? Well, some of it gets through the algorithm. They can't suppress it all. Otherwise, it would be obvious. But just know that whatever we get is less than reality, and reality is likely to be much worse. Here's another example. I mean, how these lying scum can say things like this with a straight face. Have you noticed these articles that are floating around in the media trying to tell people that inflation is actually good for the poor? I don't know how these evil, disgusting people can write this stuff and say this stuff with a straight face. There is not even a sliver of truth to that kind of statement and that kind of reporting. Doesn't even it's not even like a debate. It's not even something you could say, well, some economists believe this versus some believe that. This is not even, there's not even a shred of truth in statements like that. So Fortune, thankfully, is out with this article. Don't let them tell you inflation is good for the poor. It's not. How would anybody be able to even make that argument that inflation is good for the poor? The poor get hurt the most. October, U.S. inflation reached 6.2%, a 30-year high. Unless the Federal Reserve and the Biden administration change their current approach, the consequences of these inflation levels are likely to be most severe for the most disadvantaged sectors of society: the poor, women, and underrepresented minorities. But I thought they were all for the oppressed and the poor and wanting to help minorities and people who weren't represented correctly. Well, hey, don't worry about it. Look, Nancy Pelosi just bought a $25 million mansion right here near me in Florida. Yeah, they're all for the poor. It's unbelievable. This is like saying, the Kim regime in North Korea is really looking out for the people, and Vladimir Putin is, he's looking out for the poor. Sure. So is Nancy Pelosi and Biden and Obama. Yeah, sure they are. Yeah. It's just truly unbelievable. I don't know how these people convince their supporters that they're actually looking out for them, that they're actually doing something for them. I mean, we've had over 5 decades now of these ideologies since the late 60s pervading the country. We've had multiple administrations with these ideals. We've had the end poverty, help the poor for well over 5 decades of this stuff. Really, before that, I mean, if you go back to to the Great Depression, you could look at FDR and his stuff, right? You go back before Lyndon Johnson and his Great Society BS, right? And it's only gotten worse at a time when prosperity has increased dramatically. So, relatively speaking, the poor are much worse off compared to the prosperity that's been created in society, in the world, in the country in general, and the kind of progress that's been made. It's absolutely devastating, right? Out of this inertia and worried about interrupting economic recovery prematurely, the Fed has dismissed concerns. Oh, dismissed concerns about rising inflation, pointing instead to its transitory nature. Folks, you can't write fiction this good. This is the line with a chorus of opinions exalting the benefits of inflation. Well, that is true. Inflation has huge benefits to me, to our clients, our real estate investor clients, to Nancy Pelosi. All of the investor class are benefiting very nicely from inflation, but it's an epic scam. It is hurting the middle, the lower middle, and the poor classes. It is just devastating them. These people, when the price of gasoline goes up, it really is meaningful. When the price of food goes up, it is super meaningful to their lives. And I don't mean meaningful in a good way. I mean meaningful in a terrible way, in a very, very bad way, because it takes a huge chunk out of their earnings, what little income they have. Look, I grew up poor. I know what this is like. It sucks. And this narrative of these politicians and this left-oriented media trying to tell people that inflation is somehow good for the poor is just such an abject, pathetic lie. It is truly unbelievable. But hey, learn about my inflation-induced debt destruction technique, the technique that I trademarked years ago, that is the unique hidden wealth creator with income property. And don't let it devastate you, right? Let it benefit you. It benefits investors. It's actually quite great. But we want to help the entire sea level. When the rising tide floats all ships, right? It's not doing that right now. And that is very unfair. It's very unevenly distributed. First, the article says, inflation has important distributional consequences, disproportionately hurting the least affluent sectors more than the wealthy. Duh. Of course. Yes, absolutely. I agree. Although inflation erodes everyone's purchasing power, the wealthy tend to own assets better able to weather inflationary periods. The price of real estate assets, for example, tends to appreciate with general price increases in society. And rental income can be adjusted to keep up with rising costs of living. So if you own rental properties, of course, you're raising the rents, inflation adjusted rent increases, providing property owners some protection against inflation. The wealthy also tend to have access to hedging mechanisms against inflation, such as shifting assets abroad, where that currency is maybe in that country abroad is not inflating away the value of the asset, right? Trading currency or purchasing gold and cryptocurrencies. Conversely, the working class depends on wages and salaries staying above inflation, which is difficult to obtain in practice once an inflationary spiral takes hold. Indeed, rising inflation has already eroded the early pandemic wage gains of American workers, and real worker compensation is now lower than its pre-pandemic trend. Now, of course, the reporter in this article does not know about my strategy of inflation-induced debt destruction because they didn't say that in here. They talked about how the real estate prices hedge against inflation, the rents hedge against inflation, other investments hedge inflation. That's all well and good. But the real benefit, the mega benefit, the hidden wealth creator is Jason Hartman's inflation-induced debt destruction strategy. Learn about it. Go to jasonhartman.com, type that in. I know it's a mouthful. I get it. Inflation-induced debt destruction. Say it 10 times fast. Just go to jasonhartman.com, use the search engine at the website, type in inflation, or just start listening to the old episodes. There's so much about it. On the main video on my YouTube channel, the featured video, is all about this. It's got almost 1 million views now. And check that out. It really helps explain this inflation topic so you really, really understand it. Second, as inflation rises, so does the cost of reining it in. As inflation expectations become entrenched, in other words, everybody believes inflation is here and it's here to stay and it's coming and it's going to get worse, right? A greater effort is required to put a lid on it, right? You got to get Pandora back in the box, right? Okay. Get the genie back in the bottle, whatever metaphor you want to use. A greater effort is required, right? So this is what happened in the Latin American experience during the 80s and 90s. Agreements between business groups and labor unions pledging to maintain price and wage levels failed repeatedly because nobody believed others would comply. So inflation actually creates a huge distrust. It creates a huge unpredictability. Businesses don't know whether they should expand. They don't know what they should invest in. They don't know what they should do next year because they're all trying to figure out how bad is inflation going to impact them. And yeah, it's just huge. So that's an example of it. Okay. But what happened in the early 80s? To put a lid on inflation, to break the back of inflation, Paul Volcker, our Fed chair back then, had to raise interest rates to historic levels. And it was absolutely unbelievable. Okay, Singles Day. Let me switch gears on this just for a mention of this. So Singles Day, right? The Chinese version of Valentine's Day, right? Because there are so many singles and there's a shortage of women because of their one-child stupid policy that they had. And this is why I don't think China is going to be the next big thing like everybody does. I think China is going to, they're doing some great stuff now. They've done some great stuff for sure, no question about it. The Chinese miracle's been absolutely amazing. But just fast forward to 2030, 2033, 2035, and the Chinese miracle is going to fizzle out because they have a huge population demographic time bomb coming at them. All right, but Singles Day generates higher gross, what is that? Gross merchandise value, yeah, GMV, in 11 days than Guatemala's 2021 GDP, the gross domestic product of the entire country of Guatemala. Singles Day exceeded that, right? And it just shows you that this, frankly, conspiracy to keep people single, to raise expectations of women through feminism, to break up families, encourage divorces, you see this all over the media, creates a giant consumer market. Because remember, if you have two households instead of one household, You need 2 toasters instead of 1 toaster. You need 2 sofas instead of 1 sofa. It doubles the size of the consumer market. So the corporatocracy loves this. They love it when you have double the households, when you create a climate where you discourage marriage, you break up marriages, you encourage divorce. There's like a whole industry built around this that is profiting greatly. Just like the pharmaceutical industry profits off these terrible drugs that they're pushing, just like the college debt enslavement complex, these universities are profiting off selling these kids useless degrees and enslaving them in debt for years and years to come. Folks, we live in an era where everything has become a scam. So happy Thanksgiving. Be grateful. Sorry, my message wasn't. It was definitely a bit of a rant, but hey, you're always telling me you like my rants, so I'm ranting. So many things are just a complete scam. But we've got to defend ourselves with it, with knowledge and action that is commensurate with what's going on. Okay, so I want to talk about exporting renters. We ran out of time to do that today. We'll get to that in an upcoming episode real soon here. But we've got to go to Ashley's segment. If you are only watching this on Facebook or YouTube, you're going to miss Ashley's segment, but it's on the podcast because this is the intro for episode 1769, where she talks and gives us some good lessons about learning from history, learning from the Venezuelan disaster, and how that can really help investors in learning about jurisdictional diversification. All right, so let's go to Ashley, and happy Thanksgiving to all, and we will see you